Investors encouraged to hear that U.S. President Donald Trump thinks the massive threatened tariffs on China are not sustainable, although the broad market's down this morning. Let's get more from Denis Taillefer, portfolio manager at Caldwell Investment Management. Denis, great to see you. Stock's down today. It's always hard to figure out a reason for a one-day move. What do you think might be weighing on sentiment, though?
Well, I don't know if there's anything specific weighing on sentiment. Listen, we've had a really, really good run. So, you have to expect at some point the market will want to take a breather. So it could be any item that can really kind of set things off. We saw that yesterday with some of the regional banks, with some of the credit provisions. So I'm not sure what's going on this morning. I think, we started off earlier this morning. The futures were down quite a bit, and they kind of came back on some of the regional banks reporting today that had more promising outlooks. So it could be any number of things, but the market has had such a good run that we have to expect at some point there will be somewhat of the market taking a breather at some point.
The U.S. and China, of course, like any superpowers, are in a power struggle that's going to last decades. Right now, one of the arenas is control of technology, and China using rare earths, pretty smart, as a lever, as a potential weapon. I guess there's nothing new, though. I mean, I remember under President Biden, Washington was talking about alleged Chinese unfair trade.
Yeah, it's been going on forever. And to your point, this is something that will take a long time to resolve. So right now we're just seeing, a lot of the rhetoric kind of heating up, and that's because, there's some negotiations coming down the pipeline here over the next few weeks. So we expect we'll have more of that. It will create more volatility. But having said that, I think we've seen the playbook before. They're really just jockeying for position, trying to get as much leverage as they can going into these negotiations. And I think the market expects to see, the outcome of this will be probably just another soft deal where we'll basically have another deadline that'll be pushed out, hopefully a little longer than 90 days. So it gives the market a little more breathing room. I think they'd view that positively. But in the end, it's just more noise than anything else, we believe.
The golds have been a huge driver for the TSX this year. And we hear a lot of talk about losing faith in the US dollar, although it's interesting, the US currency is up almost 40% from 2008, April of 2008, in the financial crisis. Do you think some of this is overstated, supposed jitters over the stability of the US?
Maybe somewhat overstated, but there's still quite a few tailwinds, we think, for gold, secular type tailwinds that are kind of in play right now that will probably be in play for the next several years. We have a very unpredictable policy environment. There's also some unpredictability on inflation, right? So although inflation is coming down, there's still some worry that inflation will be stickier, a little higher than what the central banks would like to see. And so these are, types of uncertainty that basically just creates, some demand for gold, somewhat of a safe haven. So we think that's still in play and will be probably for the next few years. Can gold go up a lot higher from here? Who knows? But we do think that the price of gold will stay somewhat elevated. So the gold companies in that environment should be able to produce significant cash flow and do pretty well.
One company that will benefit if the gold price stays high, or would stand to benefit anyway, is Major Drilling. They do a lot of contract drilling for big mining companies, including exploration services. You like the look of this stock?
Yeah, we do. The mining cycles are fairly long in nature, so we've had a pretty long period of time here where the stock hasn't really done much over the last 5 years. But with the elevated prices of commodities, specifically gold and copper, which are the two biggest commodities that they're active in, that will really help, like I said, the senior producers to really generate significant cash flow, and you're starting to see their exploration budgets increase. So as that starts to increase, that really flows into the MDI business model. We're also seeing, interest rates are coming down, and we're starting to see the junior financing come back. And that's something that's been missing in the story for the last few years. So every dollar of financing that juniors can raise, that really just goes back into the ground as exploration. And that really kind of flows through the MDI business model. They're basically running at about 50% utilization rates now. So as those incremental dollars really come in, there's significant operating leverage in the business, and we expect them to do very well over the next few years.
BMO, as I'm sure you know, has an ETF, ZJG, that tracks the junior golds, and that one is up about 130% in the past year. So certainly investors are interested in those smaller gold names. Firan Technology, just remind us what they do and what attracts you to this stock.
Yeah, so Firan Technology is a small technology industrial company in Canada. They basically manufacture components for, if you were sitting in a cockpit of a plane, most of the dials and components, keyboards, all that are in the plane, those are the types of products that Firan will produce and sell. So we really like this company because the barriers to entry in the aerospace and defense industry are very, very high. So you have to meet certain standards and be compliant. And so to get certified is very difficult. But once you're certified and you start selling into that supply chain, once you're in, the switching costs are very high for the OEM. So once you're in, you tend to win these long-term contracts. You do very well. So they're a niche player in a very large market with very strong tailwinds across all of their end markets. And we expect them to do very well. It's not a very well-covered company. It's a very small, it's about 300 million market cap. So there's only 3 analysts covering it. But we believe as the story gets known better, as they continue to perform well, you'll see more coverage and then more funds flow behind that name. So it should do very well because it could re-rate. It's trading very cheap compared to its peer group here.
Denis, thank you very much for joining us today.
Thanks for having me, Andrew.
Denis Taillefer is a portfolio manager at Caldwell Investment Management.